Now to our main program, Mr. Joel Ottinger, who shared with me that he was actually here about 20 years ago. So if his name sounds familiar, that might be why. He will be introduced by Rotarian Mark Davis, who has a long history of helping us with great programs. No pressure, Joel. Mark.
Thanks, Kim. Thanks so much, Kim, and thank you, Jack, for that great presentation and all you do for our community. I'm only hoping someday when the time is right that you'll join Seattle Rotary. So in 1991, I was fortunate that day to sit next to Walter Schoenfeld. So for those of you that remember Walter Schoenfeld, he was an amazing networker within Seattle Rotary. And he said, I'd really like you to meet my new son-in-law, Joe Ottinger, who just married Leanne. And I said, I'd love to, so we met, and I can't believe it's 28 years ago that we met. And Leanne's here with her son, one of their sons today, Ryan. And he spoke a few years ago, I don't think it was 20, but a few years ago, on a book he wrote called Beyond Success, which was a bestseller on the whole legacy issue of how you actually build a legacy with philanthropy. And it was a bestseller, and he said, I better come up with the next bestseller. And he has one. It's called Iinnovate, and the title is really a guide for engaging in the innovation economy. So for those of you that want to copy the book, please let me know. Joe is a member of the Young Presidents Organization, founding board member of Seattle Philanthropic Advisor Network, otherwise called SPAN. He earned his BA from Cornell and his MBA from Harvard. Please welcome back Joe Ottinger to Seattle Rotary. Thank you,
buddy. Good afternoon, Seattle Rotary. It's good to be with you today, and I want to thank Mark Davis for inviting me to speak. Mark has been a friend for, as he mentioned, 28 years. I nearly just got off the plane in Seattle. Walter introduced me to Mark, and that was it. And Mark's been not only a friend, but a collaborator. We co-founded the Seattle Philanthropic Advisor Network together. He's been an adversary on the tennis court, a worthy one at that, and he's a big asset to our Seattle community. So thank you, Mark, for inviting me to speak. I would also like to congratulate Jack Fleischman. I've known Jack's family for a very long time, almost as long as I've known Mark. And I want to congratulate you, Jack, on your presentation and what you've done for Friendship Circle. So congratulations. Okay, so 4 years ago, I reached out to the University of Washington to help with a study of Greater Seattle's innovation economy. Initially, my objective was to support CEOs of companies I was advising to find the best in the Northwest of professional service providers and investors supporting tech companies here. Over time, the scope expanded to a study of our innovation economy and the networks that support it. Today, the study is a passion project of mine, supporting my belief that innovation has the potential to improve companies, communities, and lives. My presentation today takes us through a whirlwind tour of the history of our region's innovation economy, then summarizes where we are today and how we compare with other regions around the country and the world. And then, I think most importantly, what does the growth in our innovation economy mean to companies and leaders like you? So, we conduct this study each year because it helps us at Iinnovate understand the important shifts business leaders need to make to succeed in today's rapidly changing, tech-enabled innovation economy. It gives us keen insights to support the main focus of our business, which is to help middle-market companies implement strategic change to accelerate top and bottom line growth. So we do this through a unique combination of executive coaching and advisory services to help leaders level up their knowledge and proficiency of the latest strategy, execution, and organizational practices utilized by today's top innovation companies. We also conduct assessments and workshops for management and boards to identify their readiness to innovate, scale, and renew their companies. So the most recent 70-page report we published on Greater Seattle's innovation economy is our 4th annual report published in combination with the University of Washington. It includes a comprehensive index of the firms and professionals supporting our tech and life sciences industries, and we make the report available to the community for free in support of our mission of improving companies, communities, and lives. A link to this report will be sent out to you by Rotary at the recap of this session, along with the presentation. So, as we get started, a quiz, and just think through this as we go through the presentation. The answers will be in the presentation, but first, out of the top 10 office tenants in Greater Seattle, how many are tech companies? Don't answer now. I'm going to ask you to answer at the end. What percentage of tech talent in Greater Seattle comes from outside of the state versus homegrown? At what rate did tech jobs in Greater Seattle grow compared to Silicon Valley last year? And what percentage of tech companies are owned or run by women? So let's start our trip through the history of our innovation economy with the forest products industry, which can be traced back to Henry Yesler, who after 20 years as a carpenter and millwright in Ohio, built one of the first steam-powered mills in the country in 1852. And he started it with a $30,000 letter of credit from a business friend in the Midwest. Yesler Way was named after him. However, back then, it was a skid road with oxen dragging logs to Yesler's mill pond on Elliott Bay. Then came Frederick Weyerhaeuser, who purchased 900,000 acres of land from the Northern Pacific Railroad, paying, by the way, $6 an acre. And the timber industry in our region grew to be the largest producer of timber in the country from 1910 to the late 1930s. In fact, in 1910, the timber industry accounted for 63% of Washington State's wage workers, directly and indirectly, if you just think about that. Today, forest products is still one of 8 major industry sectors making up our economy. The forest products industry is important not only as the first economic engine in the Pacific Northwest, but in a circuitous way, it led to the second great innovation industry here, aerospace. You see, William Boeing initially moved to the Pacific Northwest to invest in timberlands. I don't know if many of you knew that, but in fact, he bought into a lumber company before founding the Boeing Airplane Company. The success of Boeing led to a whole network of suppliers and other companies supporting the aerospace industry, and today, aerospace is another major sector of our economy. This sector is also very well positioned for future technologies and innovations such as satellites, military advances, space travel, and space exploration. Now, I only show the World's Fair in Seattle because it signaled a desire by a group of Seattle business leaders for Seattle to become a modern innovation community. It also brought 10 million people to the area and left behind the Space Needle, all-web monorail, Key Arena, and the Seattle Center. In reality, however, it was 20 years before the next great company was created in Seattle to take advantage of the PC revolution. So Bill Gates and Paul Allen, most of you know the story of Bill Gates famously dropping out of Harvard, and along with Paul Allen starting Microsoft. What many of you may not know is that at its peak, Microsoft Windows had over 90% market share worldwide in the PC operating system software market, and between 2004 and 2008, Microsoft was directly responsible for 1 out of every 9 jobs created in King County. Now, under the leadership of Satya Nadella, the company is having a resurgence as it pursues higher growth markets and transitions away from its focus on the PC operating system. Which brings us to Amazon and a host of businesses built on new technologies today. As the PC revolution began to mature and high-speed networks, ubiquitous internet access, and mobile computing emerged in the late 1990s, Jeff Bezos quit his investment job in New York and moved to Seattle to start Amazon. Very quickly, Amazon grew to be a juggernaut in online retail and e-commerce, and with its innovative business model, entered adjacent markets such as cloud computing, hardware, grocery, entertainment, logistics, and healthcare, among others. Amazon's impact on the local economy has also been extraordinary. From 2010 to 2017, Amazon accounted for 29% of total new Seattle employment and $4 billion of real estate investing, creating a whole new vibrant community between the Space Needle and the traditional downtown corridor. And for those interested in trivia, Amazon has given away 2.7 million bananas on the street near its headquarters. Who knew that? You'll win Trivial Pursuit. Today, tech is one of the state's largest sectors in terms of employment and GDP, with 14,000 tech firms employing 200,000 people and resulting in $22 billion in state payroll. In addition, 8 out of the largest 10 tenants in Greater Seattle are tech companies. An amazing list. I don't know if you all knew that, but as I saw that, it was really interesting. A lot of those are Silicon Valley companies that came up to Seattle to open offices. And the exceptions are Starbucks and the Gates Foundation. And this is soon going to be 9 out of 10 because Salesforce.com just bought a local company called Tableau. And they're expected to grow significantly in the Seattle area. One other sector that we studied, but in the report, but we don't have time to detail out in this presentation, has a similar history and milestones as the tech sector, with great individuals building nation-leading institutions, such as UW Medicine and Washington State University and Children's Hospital, Pacific Northwest National Labs, Seattle Cancer Care Alliance, and Allen Institute for Brain Science, among others. And we also became a center for global health with organizations such as the Center for Infectious and Disease Research, PATH, and the Bill and Melinda Gates Foundation. So today, Washington State's health and life sciences sector supports over 1,000 firms, 90,000 jobs, and has a $23 billion economic impact on Washington State. Which brings us to how does Washington State's economy looks today? And Washington State's Department of Commerce identifies 8 sectors that make up our economy, as shown in the chart. So it's interesting to note its diversity, and that includes some of our oldest industries, like forest products, as well as some of the largest and fastest growing sectors in the future. The bottom line from our look back in history is that today we are well diversified as an economy and well positioned for the future. Now I want to transition from our history to discuss the strengths and challenges of our innovation economy today. And you don't have to get into the details of this circle, which could be confusing, but we're really going into 4 areas. Our innovation in intellectual property, the strength of our startup ecosystem, our regional competitiveness, and our global competitiveness. And in each of these areas, it involves diverse stakeholder groups, including government agencies, universities, corporations, investment firms, professionals, and nonprofits. So let's take a quick look at each one. So a strong innovation economy is almost always supported by strong funding for new innovation and produces outputs in the form of intellectual property and patents. Presumably, some of this intellectual property can then be commercialized in the form of licenses and new businesses, and that creates economic opportunities. In this area, Washington State ranks number 6 in terms of research funding, number 7 for the number of investments. Number 6 in terms of research funding, number 7 for IP creation. When we compare these rankings to the size of our population versus other states, we're punching above our weight, and therefore we're very strong in this area. So our startup ecosystems, some think when we talk about innovation, that's really what we're talking about. But as you're starting to understand, it's much broader than startups. A strong startup community leads to new companies that, when they scale, create significant local jobs and economic value. If we look at VC dollars invested in number of VC investments in startup, we rank number 5 and number 6, respectively, which is very good. We're also rated high when it comes to third-party rankings of top US cities for startups. With that said, when you look one level deeper at some of the dynamics of our startup community, you find that the overall Washington State's VC investment significantly lags other top state leaders. For instance, Boston and Puget Sound, the Boston area and Puget Sound, have about the same population. However, Boston has approximately 143 VC firms, and Seattle has 27 VC firms. And Boston has 4 times the VC investment versus Greater Seattle. And all states pale when compared to California, which is still a juggernaut in the country and in the world. And in our opinion, there is a need and an opportunity for additional VC funding to strengthen our startup community. So now let's move to our regional innovation competitiveness. When it comes to Washington State's regional competitiveness, it's mixed. Our regional competitiveness depends on our ability to attract tech talent and money to the region. The biggest measure of this is our relative quality of life ranking versus other regions. And our quality of life ranking includes our cost of housing, wages, quality of transportation and education, and other measures. On the positive side, we've created more STEM jobs than we can fill. So according to a CBRE study, the tech workforce in our region grew by 25% last year, which is twice the rate of tech job growth than Silicon Valley. At the same time, we have significant challenges related to our quality of life and education, as you can see from the state rankings. Higher education attainment ranked 19th out of 50 states, quality of life rating ranked 20th, and in addition, we're 14th in terms of high-speed broadband internet penetration. And that really is a measure of who's got access to the innovation economy, and how broad is that access, and how inclusive are we? So we've got some positives, and we've got some negatives. So globally, we're improving. When you look at the global economy, it's a measure of how we compete versus other regions around the world, versus nationally, and how we compete for VC investment, tech talent, and trade, among other measures. As you can see, we rank fairly high in the world by global exports, VC deals, and our city ranking. But what you may not know is this is the first time that we've ever appeared on most of these lists. So we've grown, and now we're actually on the radar screen around the world. In summary, you can look at our innovation economy like you would Goldilocks in search of the right bed to sleep in. You don't want an economy that is too soft with not enough innovation to drive growth in our economy. You also don't want an economy that's too hard, where our growth outstrips our infrastructure and education systems and increases our cost of living, which impacts our quality of life. Today, we are getting close to being just right. However, there are 4 areas of impact that Greater Seattle's innovation economy is having on organizations like many of yours that I'd like to discuss. There are quite a number of other things that I won't be able to discuss, like cybersecurity and data access and privacy and those kind of issues. Instead, I'm going to focus on items that are more in your control and that you can address in your organizations. And I'll start with tech talent. So there's a war for tech talent. There's a war for talent, period, but there's a war for tech talent. We're essentially at full employment in the region, and each And demand for tech workers has accelerated, and this is exacerbated by Silicon Valley companies like Google, Facebook, Apple, Oracle, Salesforce, and others opening technology offices in Seattle area. So interestingly, and in answer to one of the quiz questions, 80% of our total tech talent has come from out of the state and out of the country. Actually, it's in excess of 80%. And the short tech labor supply will continue to be a challenge unless we start doing a number of things. First, we need to graduate more tech talent from our local universities. Second, engaging more women as founders and leaders in tech and life sciences, which today stands at less than 8% of all tech company founders and leaders. In addition, we need to address the quality of life challenges we mentioned before, or we could see the flight of talent from Seattle to the next city that's growing and has a great quality of life. Second, change. Change has become the new normal, as many of you see in your companies. Technology-driven disruption and high rates of change are impacting organizations of all sizes at an ever-increasing rate. This is requiring organizations to retool their people, their processes, and systems. And to amplify this challenge, if you were to look at the S&P 500, a listing of our largest and most successful companies, you would see accelerated disruption. In 1958, corporations listed on the S&P 500 on the average stayed on the list for 61 years. By 1980, they stayed on the list for 25 years. Then by 2011, 18 years. And at the present rate of churn, it's estimated that 75% of today's S&P 500 will be replaced by 2027. The takeaway is that even the most successful firms are not immune to disruption, and technology is disrupting a greater number of industries than ever before. Third, let's go to the positive. On the positive side, for new and established companies that are prepared for change, there are more new opportunities for innovation and tech-enabled growth than ever before. A study by Harvard University identified that companies which become proficient at innovating and applying technology strategically within their companies often grow their top and bottom lines at significantly higher rates than companies that are poor innovators. We are seeing new low-cost tech-enabled opportunities for organizations in almost all industry sectors and size of company. The bottom line is that organizations that have been great at execution now need to become great at building an innovation engine to take advantage of ever-increasing opportunities in the market. And then fourth and last, due to the factors we discussed, new leadership and management approaches are required for continued success. Most companies are finding they can't use the organizational approaches that worked for them 10 or 15 years ago. They're too slow and they're not agile enough. To take advantage of future opportunities requires an understanding of how to innovate and grow in new ways, how to incorporate technologies into your business to improve operations, and how to create an agile culture and growth mindset that embraces change. The biggest takeaway here is that without mastering innovation and change, companies are at risk, and founders, board members, and others need to understand how their organizations can mitigate this risk. Okay, so that's the content. Let's go back to the quiz for a second, then we'll open it up for Q&A. So, can you tell us, out of the top 10 office tenants in Greater Seattle, how many are tech? 8, soon to be 9, correct. What percentage of tech talent in Greater Seattle comes from outside the state? 80%. Greater than 80%. At what rate did tech jobs locally grow versus Silicon Valley in 2018? Twice the rate of Silicon Valley. And what percentage of tech companies are owned or run by women? Yeah, less than 8%. So, well done, well done. And I'll just close by saying, offering to, let us know if you want to talk about strategic changes in your company We're happy to have a sit down and just talk about it. And feel free to connect. You can send an email, and Rotary has my contact information. So thank you very much.
We have a question here. Jim?
Thanks for your presentation. Would you comment on what you see changing in the innovator's dilemma, maintaining innovation in the face of successes that you've had in the past?
That is the dilemma, right? So what happens is, and part of my background was working with a Harvard professor by the name of John Kotter. And his whole body of work for 35 years has been how to lead change. And the biggest dilemma is your past success. So what happens is, as a company, you've been doing things that led to your success for a period of time. Then something changes. Either competitors come in or with new technologies, or the market changes, and you need to change. However, you're not set up for change. You don't have an innovation engine at all, and you're used to really optimizing the machine that you created, right, for growth and to create money. So the innovator's dilemma is really about low-cost new entrants coming in and basically eating your lunch. So you can think about, I think, Lyft or Uber coming into the market and disrupting taxis. Lower cost, better options. That'd be a great example of a disruption in the innovator's dilemma. Other questions?
Excuse me. Hi. I fully agree with your remarks about the lack of VC investment in Seattle and the lack of VC companies here. What do you see as the solution for that?
More VC investment. So how do you get more VC investment? I think there's a number of options, and it's really the early stage investment, okay? So once a company gets to having revenue, a proven business model, they have many more options. They can go outside of Seattle and get money. So how do you create more VC capital in Seattle for early stage? One is the government can have a role, but may or may not see the need for incentive given how successful we appear to be. And the other is I'm approached a lot by outside VCs who want to get into this market. So if you're a VC firm, a venture capital firm wanting to invest in Seattle, you're probably, in the early stage, you're probably not in Silicon Valley. So you're probably coming from other areas. Some of the Silicon Valley comes up here for later stage investing, but attracting, being open to outside VC firms is also healthy. And then third, the capital formation in Seattle. There have been about 5 new VC firms founded in the last 2 years. They're small, but with success, they'll grow. And now our market actually just supports a lot more investment. Those are some of the things I think about. And I churn on that question quite a bit.
Jeff?
Thanks for joining us today. You've talked about some of the opportunity. What would you recommend the folks at Amazon do to help improve the vitality of the area? Because they've certainly brought a lot of impact and a lot of jobs, but their relationship to the rest of the business ecosystem, could you provide some insight onto that?
Well, I actually hearken back to Microsoft during their heyday when I think about that, and I actually got a question based on the last book I wrote on legacy from Bloomberg related to Jeff Bezos, and is he doing enough personally? And if you think about Microsoft back in its heyday, it wasn't even Bill Gates who started the Gates Foundation. It was his father. And his father took the primary role. And I believe truly, and this was my answer, it wasn't popular, that Jeff Bezos will make the greatest change ever in the world related to philanthropy when he's ready, right? And when he wants to move from success to significance, he'll do it. As it relates to Amazon, the company, they can do more. I mean, and they can invest more locally. They can take their employees to do more. I think they can do more. With that said, I think New York just lost out on an unbelievable opportunity in Queens to have Amazon there because of the growth and opportunity it creates. I know this one over here, too.
Okay. Can you tell me what opportunities Seattle now has because of its increased diversity in the population? I'm not sure you're aware, but the children in Seattle Public Schools come from 200 different home languages.
Wow. What do you think are the biggest, from your vantage point?
Different ways of thinking.
Yeah. So I think it's such a strength to have the diversity we have. We have a significant population from lots of countries, but I think India and Asian countries in particular, we have a large population. I'm very much of a fan of having people study here and then have an incentive for them to stay here versus sending them back and all that knowledge and experience goes back to their home country. We don't have enough trained people to support all the tech jobs we have in Seattle. We have more tech jobs by 3x than we have people to fill them. I know it sounds crazy because we have two economies and the other economy is not getting the same benefits.
Gary?
Thank you. Fascinating information. The tools that you've applied in sort of rating Seattle against other cities and other states, have you done the same thing in rating the U.S. against other countries?
Not through a study, but through my own interest. I've looked at independent studies of U.S. versus other countries, and it worries me, especially China. China has advanced at such a rapid rate that if it continues at the rate, they will overtake the U.S. And I think innovation is a measure of future prosperity, and we have to be really careful. China has not had a level playing field. China has closed its borders. There's different ways to address that. The president's doing it in one way, but there are other ways to do it as well. So we've lost our edge if you look at where we were and where we are today. All right, so that's the last question. Thank you.